What if the very people we bought Bitcoin to escape from are actually the ones who will guarantee its global dominance? We are watching Bitcoin cross the adoption chasm right now, moving from a cypherpunk rebellion to sitting on the balance sheets of the biggest asset managers on Earth. I recently wrote about the discomfort of this financialization. Did we win or did we just get acquired? In this episode of Bitcoin for Millennials, macro researcher Joe Consorti joins me to unpack this tension, analyze current macro and inflation data, and explain how global liquidity is shaping the next era of hard money. But first, he's going to explain why his data suggests that we might have to survive one more brutal leg down before the real fireworks begin. If you're enjoying my content, it would mean a lot to me if you could subscribe to the channel and like my video to support my journey. Thanks a lot. Now let's dive in to this episode. All right, Joe Consorti, welcome back to Bitcoin for Millennials.
Good to be here, my friend. Thank you so much for having me.
Well, thank you so much for taking time. Like I just said off mic, I really love your YouTube stuff. I'm going to link in the description, obviously, so everyone can follow you. And so I'm happy you're here. I wanted to talk about, the financialization of Bitcoin, using Bitcoin as collateral, Bitcoin on Wall Street. But first, I kind of want to check in with this. What's happening in macro. This is basically what you talk about a lot. So again, I would invite everyone to follow you. We saw, of course, Kevin Warsh, who's the new Fed chairman, and he's not talking. I don't know if he's talking about rate cuts, right? But the market has been kind of like pricing in the rate cuts, or so it seems. But you've been looking at like inflation data, and you're arguing that the Fed is basically facing an impossible choice between fighting inflation and saving asset prices, right? Because the asset prices go up because of the inflation, but the affordability of life obviously is running away from many more people, right? So there's a big tension there. Could you kind of like break down what you're seeing in the numbers that you think people are kind of ignoring now?
For sure. Yeah. So it really boils down to like the inflation spike that we just endured. And frankly, like to call it a spike is, it's accurate, but it's also discounting the fact that we have spent 64 months now above the Fed's 2% inflation target, which is just completely insane, right? If I could use more expletives on YouTube without getting demonetized, I would. But that's almost 5.5 years, right? For anybody not, who can't.
We can say it's fucking high. You can say fuck
exactly.
on YouTube.
We're really fucking high. So it's
60 months?
Yeah, 64.
Wow.
So like we've come close to 2%, and now we seem to be declaring victory after price inflation drops from 4.1% per year to 3.5%. Guys, 3.5% is still almost double our actual goal, right? It's 1.75x higher. And so the reality is like basically they have to this point sort of unofficially raised their inflation target. Not officially, it's still 2%. But in actuality, like the fact that they're basically celebrating and saying there's still more work to be done, but still celebrating after we came down from 4.1 to 3.5 tells you everything you need to know. And basically, we're in this new regime now where we started having to expand the balance sheet again back last December. Bank reserves, which are basically like you can think of it as like the engine oil for the banking system. They reached a critical level to the point where like the proverbial engine would no longer run if they continued declining. And so the Fed decided, you know what, we're going to buy X billion dollars worth of US treasuries every month. It was like 8 billion, something like that. Nothing crazy, but enough to grease the gears. And as a result, price inflation began marginally ticking up after that. You throw in the Iran war, and most of the price inflation we're feeling now, the spike from, like 2.9 all the way up to 4.1, was as a direct result of oil spiking from $60 before the war began to $121 at its peak, I believe. And so now that price inflation came down, people are looking at the report and saying, okay, well, what's the reason for it? Well, the reason for it is because very briefly, the Strait of Hormuz opened up and oil was allowed to flow through. The amount of barrels that were actually crossing through the strait began ticking up ever so slightly heading into the month of June. And then lo and behold, live fire begins again. Just last week, we started shooting a bunch of tankers. They started shooting a bunch of our tankers. And as a result, the number of barrels actually going through the strait is falling back down to zero where it was for about 4 months straight. That's not ideal. And as a result of that, WTI crude oil has jumped back up from $60 to $80. Now, do I think we're going to go all the way back to 120? Probably not, right? Because the other OPEC nations and the United States are going to work on, have been working on shoring up their oil production and increasing it to offset the price increases. But regardless, it's still quite a substantial development. That's what caused oil. So basically, the thing that caused CPI to drop, the inflation report to drop 3.5%, is it's now no longer the case, right? It now spiked back up in the other direction. So chances are maybe we go a little bit higher, but we're definitely going to be hanging out in this zone for some time in the 3.5% region. And so that begs the question, like, what do we do from here? How does the Fed get inflation down? How does the Fed justify rate cuts heading into midterms when the only reason they were chosen was to cut rates to make sure that asset prices were juiced? Well, you could either, allow these things to run their course and open up the Strait of Hormuz. I thought that was the playbook they wanted to go through, but evidently not. We still want to bomb them, even though it's wildly unpopular, with the same voters that you're trying to win over in the midterms. Regardless, the other strategy is to just change the way that inflation is measured entirely. And it seems like that's what they're trying to do. And so Kevin Warsh, he has been an avid proponent of talking about something called the trimmed mean PCE. Now, the trimmed mean PCE is something that is a totally different measure of price inflation. And effectively what it does is it strips out the highest and the lowest gainers on the month. So like CPI, you have a basket of goods. That's how we measure price inflation. Basically what trimmed mean PCE does is it takes the assets on the very top that rose by an extreme amount and the assets on the very bottom that fell by an extreme amount, and then cuts off both of them, like cuts off both of the tails, and you're left with the middle. Now, a couple of issues with that. And many people have said, okay, that's actually reasonable because price spikes like what we just saw with oil won't be in the print. Well, number one, the reason that that's silly is because most people feel the pain of inflation at the pump. They feel the pain of oil inflation at the gas pump. And you feel it in food prices. And so to basically say, okay, guys, in the event of like these transient shocks, supply shocks, we're going to make it so that those numbers aren't included. It's just making a less accurate inflation measure. Some people argue the opposite, but think about it this way. Like if gasoline did what it did this time around, which jumped from like $2.50 a gallon to $4.50 a gallon, and price inflation said that nothing was changing, right? Even though like you shouldn't raise rates because of an oil spike, for the typical American consumer, they might look at that and go like, that's complete BS. Number two, most importantly, it's actually skewed to the upside, or skewed to the downside rather. So what they're doing when they cut off both tails, both the hot stuff and the cool stuff, they're actually weighing it more toward cutting off the hot stuff. So they're cutting off like the top 34% of really hot inflationary items, and only the bottom 25%. So there's a 9% spread, or actually I think it's an 11% spread, but either way, massive 10-point plus spread skewed to the cool side. So even now when they're saying that this is a more accurate measure of inflation, it's underreporting the actual number. It's making it skewed to the cool side just when we need a more accurate inflation number more than ever. So the other component about this, and then I'll stop rambling, that's sort of where we are as far as the Fed is concerned, is you've got the Dallas Fed. So the Dallas Federal Reserve, you've got several Federal Reserve banks all around the United States that collectively make up the Federal Reserve. The Dallas Fed, that is responsible for the creation of the trimmed mean PCE, has literally gone on record and said that you should not use this measure. Take it with a grain of salt. You should not use it to guide policy decisions because it is not accurate. And the new chair of the Federal Reserve hasn't addressed any of that. He wants to use it because it literally shaves. If you take trimmed mean PCE compared to the Fed's preferred inflation gauge, the Fed's preferred inflation gauge right now is at 3.6%. Trimmed mean PCE is at 2.4%. Right. So it's no wonder why he wants to use this one, because it will allow him to cut rates despite the data not actually supporting that decision. So who knows? Right. I think, right now markets have basically totally priced out rate hikes. Right now, there's only one hike priced in between now and next year, when there were 4 priced in just a couple of weeks ago. And I tend to think that's going to go to 0 and then eventually rate cuts, as long as oil can stay where it is. If oil spikes up even further, all bets are off. Inflationary recession on the table. But that's basically the TLDR of the macro backdrop right now.
Most people stop too early with Bitcoin. They buy it, maybe move it to a wallet, and think they are done. But they're not. The real questions are how you're securing it, how private your setup is, and whether you're verifying your own transactions or trusting someone else. And what happens to your Bitcoin when something happens to you. This is the layer that most people ignore, and it's the most important one. That's why I've been working with the Bitcoin Way. They help you set up self-custody properly, including privacy, cybersecurity, inheritance, and even running your own node. And they do it without ever touching your Bitcoin. They're not a custodian, they're your support team. If you're serious about this like I am, go to thebitcoinway.com/Bram, that's BRAM, to book a free call. They'll walk you through your setup, personalize everything to you, and help you get a much stronger position very quickly, whether you're a beginner or more advanced. That's thebitcoinway.com/Bram.
I absolutely love how interesting this is to follow. But I think once you just see how much of a scam fiat money is, right? You just see the performance through all the numbers, the abbreviations, the new terms, right? Like it's all like a performative thing, just to kind of like keep the ball rolling and see who still believes in the play, basically, right?
No.
And I remember who was I talking to? Cole Walmsley. He told me, in let's say 1920s or 30s or something, you had maybe like 10 abbreviations in finance, right? And now you have I don't know, like 180 or whatever, like just this insane number, right? And now there's a trimmed mean p, TMP, right? Like there's this new thing.
Yeah.
So I find it so fascinating that obviously we'll get to Bitcoin, right? But like once you get into Bitcoin, it's just like it's just way more relaxed watching this, right? It becomes it stays interesting, right? But I think if you're not in Bitcoin and you're seriously following this, I just wonder what these people think, because it's just so unpredictable, right? Like it's very unpredictable, and basically you have to watch every day who says what, this and that. Whereas with Bitcoin, I think we're just coasting, and this becomes perhaps a bit more entertaining or something, just to follow, to see how it eventually works out. Yeah. So with Iran, you mentioned Iran. Obviously, that's a huge headwind. But historically, war triggers this flight into hard assets, gold, etc. But you recently pointed out that um, Bitcoin is kind of passing the stress test here. Do you think Bitcoin is already seen as like a true safe haven, or is it more? Is it just still trading like a stock, right? Like a high tech beta stock, or are you seeing kind of like a flip in
For sure.
how people perceive Bitcoin?
It's a really good question. It's interesting. Like when the war first kicked off, Bitcoin was the best performing asset for about 2 months. 2 months into the war, following February 28th, Bitcoin held relatively steady, and it had increased by about, I think, like 15% over the course of the war compared to everything else, which was actually down. And so for a while, it was outperforming, but I think it was purely outperforming because the forward expectations about the end of the war were actually much more optimistic. And then as the war dragged on, people said, you know what, this is actually probably going to continue for longer than expected. And as a result, Bitcoin sold off. But now you're starting to see things turn a little bit, at least in this one instance. Silver is now down 50% from its high. Who would have known? Peter Schiff, you've ruined so many lives. I can't believe you've been such a gold and silver shill. Silver is down below $4,000 an ounce for the first time in, I think, 6 months, 7 months. So, gosh, I wonder when Peter Schiff is going to start his apology tour. But over the last 5 days, you've seen an interesting shift. To date, Bitcoin and gold have been the two worst performing assets, silver as well. But Bitcoin, alongside the monetary metals, have been the two worst performing sets of assets over year to date, which is something that never happens. It has never happened historically. And so they do seem to be somewhat correlated. I think that's just purely a function of just like a transient, spurious correlation that doesn't mean much of anything. But what you are beginning to see is risk appetite begin to turn at the margin. Bitcoin is still really tightly correlated with risk, but that's not to say it's correlated with equities, which is strange. I'll get into why that is in a moment. But what I'm getting at is that over the last 5 days, gold is down about 5%. Bitcoin is up 1%. Which is very interesting. So at the exact same time that gold is beginning to sell off massively, semiconductor stocks are beginning to sell off massively and rotate into mid caps. Bitcoin is doing well. Now, why is that? Couple of things. I think Bitcoin has done poorly since last October because it's been the only rational asset. It's an extremely volatile asset, don't get me wrong, but it is the only rational asset in the sense that the reason the equity market has done so well is not necessarily because of risk on strength, right? Like this hasn't been necessarily the best environment for risk. We've entered into a brand new global war. Inflation is high, not just here in the United States, but around other countries too. For the most part, money printers have not really been turned on apart from like a low rumble. And so and the consumers stretch pretty thin. And so you actually, and not to mention you have a hawkish central bank on top of that, and global central banks are actually hiking, right? We aren't, but global central banks are. And so it's like, this is not an environment for a risk asset investor. This is an environment where you want to go into corporate bonds and sit there and chill out until a crash happens or investors rotate back risk on. Bitcoin has been the only asset that's actually accurately reflected that. Like Bitcoin going down actually makes a lot of sense. Like Bitcoin isn't broken. It's literally the only asset pricing in reality. So then that leaves the question of equities. Why on earth are they performing so well? Why have they done so well? And why I believe they'll eventually turn. They're just not pricing in reality as a result of the AI trade. The AI trade is so monumental, once in a generation IPOs, but also people want to be allocated before those IPOs. SpaceX, largest IPO of all time, $2.2 trillion. Literally, it IPO'd larger than Bitcoin, went all the way up to $3 trillion. Guess what? It's down like 20% now. So obviously IPOs are an exit liquidity event. They're not an instance in which investors should be buying. You should be selling, unless you don't want to make money for the first 2 years. You should wait for a year or two and then buy because they're exit liquidity events for early investors and early equity holders. Regardless, people want to be allocated during those events. And so as a result of that, and they want to be allocated to things like Micron, things like AMD, things like NVIDIA, things like SanDisk, these AI and also these semiconductor names and these chip names that have done just exceedingly well as a result of AI being this massive boom. There's massive capital expenditure, massive investment going on, massive proliferation into the consumer market. And during that mania, people want to be allocated. So that's why equities have done well. Not because the risk backdrop is really good, but because everybody wants to be invested during the AI boom. That said, not if, but when flows reverse and the AI trade begins to accurately reflect reality, both the reality of literally zero free cash flow and the reality of the macro backdrop, things will turn and they'll turn violently. And chances are you're going to see a correction in the equity market. Now, will that correction in the equity market come alongside a crash and everything else? Will it come alongside a recession? That remains to be seen. I can't really soothsay that far out in advance. If inflation does continue rising and this last month drop was just one transient event, then I could see an inflationary recession this year and rate cuts. But what I think is going to happen, what I think is the more likely scenario, is that rather than a traditional recession that causes the equity market to top, I think you see a local top in the equity market just because things get too overextended and that capital doesn't rotate risk off and it doesn't go into cash. It actually goes into other assets, right? So you're beginning to see this at the margin. Capital is I literally made a video last Friday called The AI Bubble Just Popped. Bit of a hyperbolic title, whatever. But I cited like, look, guys, largest one-day inflow to a semiconductor ETF ever. Not just the largest inflow for this ETF, but the third largest single-day inflow of any US ETF in history. That seems like the top of a bubble, you guys, or at the very least, the beginning of a major correction. People were calling me a moron. They were like, Joe, you have no idea what you're talking about. Lo and behold, like literally Monday open, SanDisk is down, Micron is down, like all of these names massively down, SpaceX crashing, and so it's like there are these indicators. And so like that's underway. It's moving not out of risk, but into things that are not AI names. That's like just mid-cap stocks, but also Bitcoin, right? The same day that SOXX, the main semiconductor ETF in the United States topped, Bitcoin reversed. So I don't think Bitcoin is bottom for the cycle. We can get into that as well. I think Bitcoin may have another leg down. and at the very least, some time to chop around from a time perspective. But literally to the day that the semiconductor ETF topped, Bitcoin found its local bottom. Whether it's the start of the bull market remains to be seen. I don't think so. But either way, that is a demonstration. That is proof positive that you can see a rotation of risk capital out of AI names without everything else crashing, right? Rotations can occur in the middle of a longer bull market. That's exactly what we're seeing right now. And I think that trend will continue to accelerate over the next 3 months. So the original question was about Bitcoin and gold. I just realized I went on this massive tangent. But like, are Bitcoin and gold still correlated, or are they have they grown more correlated? Has Bitcoin broken its correlation with equities? I think the reason that Bitcoin is going to break its correlation with equities in the long run and become the least correlated asset in global markets is not the reason it broke its correlation with equities this year. So I just laid out the case for why Bitcoin broke its correlation with equities this year, and why you're still seeing it right now. But I think that over the long run, the reason will be different. Over the long run, Bitcoin will be the least correlated asset during every period of the market cycle, risk off, standby, and risk off, because of its monetary properties, right? Not because of the fact that it doesn't have corporate risk, it's not part of the AI trade, whatever, but because its monetary properties allow it to be the least correlated asset ever, right? So it'll trade much more like gold, but without all of the sovereign risk. It's like literally the asset you want to own in good times and in bad times. But we're not there yet, right? So like Bitcoin broke its correlations, not for the reason that it will break its correlation in the long run. As far as like that process to continue, it's going to be a gradual one, right? Like it's not a destination we arrive at. It is a process that occurs as Bitcoin monetizes and its adoption grows. So, cycle after cycle, Bitcoin's correlation with equities will continue declining. And then cycle after cycle, Bitcoin's correlation with gold will rise a little bit and then eventually decline, because gold too is also marginally correlated to equities. At least it has been over the last 18 months, which is hilarious because, the whole argument for owning gold, and I still like gold, don't own much of it, has been that it isn't correlated, but it has been, which is funny. Bitcoin has actually sort of taken on the role as the uncorrelated asset this year. But I digress. I think that's a process that occurs over the next several years and decades, but we're not quite there yet.
You teed up the one more leg down question that I obviously had very well. You mentioned that the 4-year cycle suggests we have one more leg down before a true breakout. I wonder what price you're looking at. Um, with regards to this, you're talking about it like it's the final stage of the bear market. People hate that, obviously. Maybe this is a fake bull trap that we're in right now. But what are you looking at? Like, what kind of mechanisms, historical precedent? What drives that view for you?
For sure. So it's a really good question. And, people love to call the bottoms. I'm not as quick to call the bottoms. I made a video 2 or 3 months ago, semi-jokingly titled, "The Bitcoin Bear Market is Officially Over." But in that video, I was not saying the bear market is over. I was saying the bear market is very close to being over. And the levels I laid out in that video are the same levels that I'll talk about now that will dictate, in my mind, the end of the Bitcoin bear market. So I'll actually pull up a chart of what I want to show you. And this is sort of like my personal line in the sand as far as a Bitcoin bear market bottom is concerned. And also like the main support during a bull market. And that is the 200-day moving average. I'll go ahead and pull this up here. As you can see here, Bitcoin has historically, and I'm talking about the orange or the blue line here for people who might not be aware. Basically, the 200-day moving average, what this is it's the rolling average price of Bitcoin over the prior 200 days, or roughly every 4 years. You can see here that during bear markets, that is the primary resistance that Bitcoin has to break above before it's officially in a bull market. And then during bull markets, it serves as a tremendous level for support where it rarely, if ever, breaks underneath it. You could see that over on the far right of this chart, you could see that Bitcoin made an attempt at breaking above that blue line, the 200-day moving average, all the way back in May, back when the 200-day moving average was at $82,000. Bitcoin was very close to breaking above it. That's when I made that video. It didn't happen. Now, Bitcoin is obviously at $64,000. Everybody's saying, all right, guys, bear market's over. But we're still $9,000 underneath the 200-day moving average. So like I would hesitate to say that the bear market is over until we break above and hold above the 200-day moving average for at least 2 weeks. That has historically been the period within which like bear markets have always been over for Bitcoin. I mean, things can change. Bitcoin's only a 17-year asset. But that's the first thing I'm looking at. From a price perspective, that's the level we need to break. So that's number one. When will we know we're out of a bear? When we break that level? And of course, that level is trending down over time. So what about downside targets, right? Well, the main area that I like to look at is the low $50,000 range, the high $40,000 range to the low to mid $50,000 range. Why do I say that? There's a quite a tight confluence of on-chain levels there. You have the long-term holder cost basis, which is just simply put, like non-Bitcoin speak, because I know a lot of these terms can get really technical. It's just the average purchase price, generally speaking, the average purchase price of people who have held Bitcoin for 155 days or more. There are some more technicalities in there. It's not always because they bought Bitcoin at that level. It could be the price at which they last move their Bitcoin. But you got to understand, most people just buy and hold Bitcoin and they don't move it very often. So generally speaking, it's a good indicator for where the people on the network who sort of are buying forever, holding forever, the smart money, have sort of laid down their foundation. That's at about $50,000, $50,000 to $53,000. Typically, Bitcoin always reaches that level during a bear market before it bottoms fully. Now, that's not to say Bitcoin has to go all the way down to that level. But it is to say that historically it has. And so as far as like a bottom of the basement, downside target, worst case scenario, that's where I'd be looking. One reason I don't think we're actually going to make it all the way down there. Number one, crazy amount of demand demonstrated in the high $50,000 range. Insane. Like the amount of time we spent in the high 50s before exploding all the way back up to the low to mid 60s was like cumulatively 20 hours, maybe 22 hours. And so like there's clear crazy demand there. And guess what? That crazy demand extends all the way down to like 54K. Below 54K, it gets a little bit thinner. But regardless, like the bears have to break below all of that support before reaching that key level. So I don't think it'll happen, right? And then you also have to consider, if it doesn't occur, then long-term holders at some stage are going to realize, oh, the bull market's here. I can't buy back at my cost basis. I've got to buy in now. And so this could very well be the very first Bitcoin bull market that kicks off later this year, where long-term holders are actually chasing instead of actually buying around their cost basis. However, should price inflation persist, should it continue rising because oil continues rising because Trump wants to, kill a couple more Iranians, which is unfortunate. I think he's done a pretty good job beyond that. Apart from the crypto grifting stuff, excluding those two things, I'm happy I voted for the guy. However, if those things persist, then chances are you're going to see another leg lower for Bitcoin this year, just from a macro perspective. And then the other thing, and I promise I'll wrap this up, and this is what James Check talks about all the time. Basically, everyone watching the show, I'm sure you know James Check, Checkmate, talks about time-based capitulation. And what that means is I just went through the level Bitcoin has to break to kind of officially be out of a bear market, historically speaking. I went through like the downside target, so how low Bitcoin could go. But the third and final variable is how long will it take Bitcoin to get there? Or at the very least, how long will it take Bitcoin to fully form its bottom and begin ascending higher? Generally speaking, if we're just following the Bitcoin 4-year cycle, which for the longest time, at least late last year, early this year, I was no longer a proponent of. I was saying that the 4-year cycle is dead. The halving impact is marginal at this point. I was wrong. Human psychology wins the day. Traders wanted it to persist. So here we are. The 4-year cycle called the Bitcoin top literally to the day. Like actually to the day. It's kind of crazy. There's a 4chan screenshot that has been screenshotted and circulating where someone said, we live in a simulation, guys. And it was like Bitcoin took 1,064 days between this cycle bottom and this cycle top. If you did it this time, Bitcoin went top October 6, 2025. It did literally to the day. So simulation theory confirmed. I'm kidding. But
Maybe.
Potential. I don't think so. If anything, like the whole simulation theory is like, oh, there's someone at the helm of reality who's pulling the strings. It's like, yes, obviously there is. His name is God. Like we've had the book for tens of thousands of years. He's talking about anyway. I digress. The thing is with this, it's like the 4-year cycle would then posit that Bitcoin typically bottoms 10 to 16 months after the cycle top. So that would put us at the earliest 2 weeks from now. Right. Don't want to get anyone's hopes up. At the earliest, that would put us 2 weeks from now. At the latest, that would put us next February. But generally speaking, it's about a year after the cycle top, which would put us October of this year. So that's basically the big three. Like, what price level do we bottom? When do we bottom, or at least begin moving higher? And when can we know we are officially back in a bull market? Those are kind of my three levels and sort of my time frame to watch.
Every Bitcoiner hits this moment. You need cash, maybe for a house deposit, an emergency, or a tax bill, and you're staring at your stack thinking, do I really want to sell this? Here's the thing, you don't have to. You can borrow against your Bitcoin instead, so there's also no taxable event and your stack can keep on stacking. This is where Firefish comes in, a peer-to-peer marketplace for Bitcoin-backed loans. And Firefish is not a lender. They built a protocol that makes this all possible, which is exactly why they never, ever have to touch your Bitcoin. During your loan, your Bitcoin sits in an on-chain multisig secured by open source code. You can find offers for different amounts, durations, and rates at firefish.io. And when you decide to get a loan, you can use code BRAM to get 30% off your first loan's fees. That's firefish.io and code BRAM.
I think 58K the meme is more than a meme.
Yeah.
So maybe it's real. There's a 58K gang that just buys Bitcoin at 58K. And what I think of the 4-year cycle, like that whole idea of that's when you sell, and then these amounts of days you buy again, etc. It's people talk about it like that is how Bitcoin behaves, but it's just the people that behave like that, right?
Yep.
And I honestly thought it was dead because of also a lot of the stuff that you just went through, right? And what you also said, Bitcoin is the most rational asset. Yeah, if everything is just fake and pumped up, and you never really truly own any stocks, right? Like owning Bitcoin is so rational. But the world is not rational. That's definitely what we're seeing, especially not with, I think just, the debasement is also an accelerant for people to just, go on and invest and leverage and etc. Right. So rationality is kind of out the window, I would say, especially in this phase. Maybe it comes back when everything comes crashing down and people just want to, store their time and energy in something that no one can control. So maybe we'll see that, right? But I also think it's going to take some time. It probably needs a huge crisis or something for people to realize that. It's way more shaky than they think. But we'll see. I kind of want to switch or kind of extend what we're talking about more toward Wall Street. I think it's really interesting. Like we're talking about, you're following macro. We're seeing everything happen. We obviously found Bitcoin. We're chilling. We're following. We're watching. Right. But we're also seeing that Bitcoin is going through that monetization phase, as you mentioned. It's being financialized on Wall Street. There's paper Bitcoin. Bitcoin is used as collateral. And so I really wanted to get your take on how you see this evolvement from, cypherpunk rebellion to it being, I think you would agree, the most pristine collateral in the world. And now the finance world kind of figuring that out, albeit very slowly, right? I recently wrote an article where I argued, and that this is what I think. I think the Bitcoin capitalists, as Michael Saylor wrote about, right, fundamentalist, maximalist, capitalist, and technologist. I think the capitalists are the ones that are kind of like pulling Bitcoin across this chasm of adoption, right? There are people in TradFi, I'm thinking, Bill Miller, people like that just understand what Bitcoin is, and they understand that, it needs to go through this financialization phase. But obviously, for a lot of people, that feels like a betrayal. They talk about, we started, joining Bitcoin and using Bitcoin to get away from these people, and I agree. But I also think it is necessary, and it actually shows that Bitcoin has value and it can function in the financial world. And yeah, just wanted to really get your take on how you look at that, being someone who is I want to say, like one leg in one world and one leg in the other world, and your interest also there, right? So I just wonder if what you think, and also maybe how you explain um, the adoption of Bitcoin in the finance world.
For sure. The thing that and this is a really great, meaty question. The thing that I'll start with is by saying that Bitcoin didn't change. The only thing that changed is like who is buying Bitcoin and who is using it. So the cypherpunks who are upset that Bitcoin is being used in ETF wrappers and being used by companies like Strategy, well, guess what? You won. Like you won. The whole
That's what I
idea of
think. Yeah,
Bitcoin, and
exactly.
it's like
Yes.
exactly like the early writings of Bitcoin. Satoshi wasn't writing about this, but like Hal Finney was writing about this. He was writing about Bitcoin banks and how eventually you would need to have entities who would like write credit instruments on top of Bitcoin. That's what Strategy is doing. You could disagree with Strategy, you could hate Saylor, you could not like the business model, you could think it's going to get destroyed. But the reality is, like, this was an inevitability, and not just Strategy, but like the ETF wrappers as well. Very early writings of Bitcoin, all said like Bitcoin is money for enemies. Bitcoin is money for enemies. Like the fact that I could use it and someone that hates me wants to use it, and the fact that like a terrorist, in like Indonesia or whatever can use it, right? And we're all using the same money, and like I can't stop him from using it, he can't stop me from using it. Like that is basically the entire point of Bitcoin. In the West, like obviously the main value prop of Bitcoin is that we can, protect ourselves from price inflation. That's nice, but like the monetary properties of Bitcoin also make it such that anybody can use it, regardless of whether or not you agree with the way they're doing it. So like the cypherpunks won, so I don't understand where the vitriol is coming from. To your point about adoption is I think it's quite impressive and quite remarkable. And I did think this is the way that it was going to go. I thought you would probably see different people trying to innovate on top of Bitcoin. I didn't think it would be a public company. Well, I did think it would be a public company, but I didn't think it would be a non-financial services entity. Strategy is sort of interesting because they've morphed from a software company into now basically a Bitcoin financial services company, effectively, right? Like you obviously can't buy, hold, and store Bitcoin there, but they are creating Bitcoin adjacent financial products. And so what I initially thought was like you would begin to see Bitcoin backed bonds from like Bank of America or some small regional banks first. Those would not be traded on the public market. And then all of a sudden you would get like legitimate Bitcoin backed corporate bonds. And they would be some of the most popular corporate bonds out there. Instead of that, we got Strategy's preferreds, which are, an innovation in the exact same sense, in that like you are in a way penetrating the fixed income market, which previously either wasn't on the risk spectrum to be holding Bitcoin in the first place or has a mandate to not hold Bitcoin. They have fixed income exposure mandates. And so it's very cool what they're doing. People can take issue with the way that these things are marketed or the way that they're structured or what have you. But in my mind, it's innovation. It's a good thing, right? It's pushing the ball further. It's running the ball further down the field. And that's really what we need, right? So I am, as far as like the collision of Bitcoin and macro, what I try to do on my channel is like explain Bitcoin through a global macro lens, but also make like pure play macro videos that fold Bitcoin into the call to action or like the solution. And I've had numerous people say, like, Joe, I hate it when you talk about Bitcoin, but like you bring up a good point about everything else. And those comments always get me because it's like, okay, if I'm an idiot about Bitcoin, but I'm somehow right about everything else.
Yeah.
Isn't the more probable
Think
outcome
again.
that I'm also right about Bitcoin?
Yeah.
Anyway, but it's like the whole point is these two worlds have collided now. Wall Street, businesses on Main Street, and individuals, like they've all realized the exact same thing, which is that, oh my goodness, like I am being priced out of everything. The money is being debased at a rapid rate. I need Bitcoin, right? And whether you're a company building a business around Bitcoin by letting people buy it, or you're a company building a business around Bitcoin by issuing public securities and then using the proceeds in order to buy Bitcoin and using the appreciation of the Bitcoin to fund the obligations from those instruments you're selling, or you're a company trying to build Bitcoin-backed bonds or whatever you're doing, Bitcoin is for you, And so I think all of these developments are pushing the ball down the court, right? It's quite remarkable that Strategy has managed to, or not just Strategy, but like just a company in general has managed to become one of the largest in the United States, and their entire business model is buying and holding and selling Bitcoin.
Yeah,
Pretty insane, right? Like the biggest headlines you would hear about it 12, 14 years from now ago were, like Ross Ulbricht being arrested and like, drug websites and nefarious and human traffickers and blah, 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 all this other stuff that was just not true.
Yeah.
And now, like one of the largest companies in the US, it's their entire business model. So it's a remarkable evolution. I don't know where Bitcoin is going to be 15 years from now, but if the last 15 years have been any indication, it's only going to get more integrated into the way that Americans do business, both at the public and the private level. So get used to it.
Yeah. No, I absolutely love this answer, and that's also the core of how I think about it. It's just like it shows Bitcoin has value, right? There's people. Well, it's funny, right? Like there's people whose job it is to figure out Bitcoin, and a lot of them haven't figured it out, right? But there's also quite a few that have. And how I approach this is just by sharing. Like, do you know how many random ideas? Do you know how many ideas are shared on the internet every day? Billions, right? Billions. Think how many ideas have been shared on the internet for the last 17 years, right? Like you cannot even count them. But this random idea released on a random internet forum, right, is still here. It's still working. Millions of people know about it. They hold it. And there are people that are building on top of it. They're realizing, the money is a scam and all these things. And that is everything that we are realizing, right? But I do also understand when people talk about like how these are the people that we wanted to get away from. I think it's a necessity to get to global adoption, right? Like I don't think it's corrupting the asset, and it's like you said, right? Like Bitcoin doesn't change. The people that buy it have changed, which actually shows that there's a use case for the cypherpunks, and the millennials here that don't have a pension, and also the guys on Wall Street, right? And what I kind of think is that, and this was also my next question for you, and I really, really wonder what you think of this, right? Like in fiat, when leverage blows up, the Fed prints and there's this bailout, and Bitcoin doesn't do that, right? I think it just washes out the liars, right? Like Bitcoin is so much more transparent and hard and real that if Wall Street builds massive layers of paper Bitcoin derivatives, rehypothecation, all that stuff, and it stops being redeemable for Bitcoin, right? I mean, you either have the Bitcoin or you don't, right? There's not that much abstraction and obscurity that you can create, as opposed to in the fiat money system. I mean, look at great financial crisis. These what was that called? Mortgage-backed securities, and so all that shit put together and whatnot. That was like a layer of a layer of a layer of a layer, like an abstraction of an abstraction of an abstraction, etc.
Yeah.
I think you can do that with Bitcoin too, but way less layers. Maybe 2 instead of 12 or something like that, right? And so Bitcoin, if you build something on Bitcoin, you have to adhere to what Bitcoin is, and the fact that transparency can be forced, for example, right? So I think it is so different from the games in fiat money, but people still look at it from all the games they've seen being played with fiat money, and they project that on Bitcoin, which I personally think is wrong. I do think that there will definitely be blowups, right? There will definitely be people. I mean, we had FTX, so all that stuff. I think it's going to happen again on Wall Street, and that is the whole point. The whole point is that Bitcoin brings that light, in a sense, right? It shows that this is not the thing to be manipulated, right? You cannot have, like in a great financial crisis, a real estate portfolio where no one lives.
Yeah.
Like that's literally empty, right? And there's no income and whatnot. Like you either have the Bitcoin or you don't. And so that I personally think is extremely fascinating, because the people who are going to adopt Bitcoin on Wall Street and play the games will probably not understand that these are the characteristics of Bitcoin. And then Bitcoin will show them how it works, right? Or people that actually understand Bitcoin will show them how it works, and then it's going to blow up. And that is unfortunate, but I do think also that is necessary to showcase that Bitcoin is something extremely different from everything that people have known before. And so, yeah, I just wanted to get your thoughts on that, because I think it's early. The adoption of Wall Street is early. People are complaining, blah, blah. But there's, I do think there's several things that you could take away and just see how it's going to go, right? You also have to have like a little bit of faith in how Bitcoin works and what the properties of Bitcoin are in order for it to prove itself.
100%. It's I think that there is much, and I've been saying the same thing for quite a long time now. There is much lower window of a much smaller window of opportunity for fiat games to be played when Bitcoin is the base layer asset. Like, a lot of the reason gold's price has been viewed as heavily manipulated over the last 25 years, 35 years, has been the introduction of COMEX, gold futures, and what people called paper gold, which is basically where, because of the gold futures complex, you can effectively, in a way, create an endless number of claims for the exact same unit of gold. And so people think they're buying gold, but the price doesn't move because the underlying was not actually purchased by anybody. And that's one of the reasons people speculate gold was flat for basically a decade before moving higher over the last 24 months. With Bitcoin, it's much harder to play that game. Why is that? Because Bitcoin is instantly verifiable, right? Not only is it instantly verifiable, because we've seen crypto blowups before, obviously, like, that verifiability didn't matter much. It's not just instantly verifiable with Wall Street. Also, the amount of auditing that happens on Wall Street, particularly post 2008, in order to make sure that the asset you claim to have is actually there for publicly traded companies and companies that are creating publicly listed entities like BlackRock, Fidelity, all these places that people claim are creating paper Bitcoin, is so rigorous. They have entire departments, teams with hundreds of people who are delegated specifically to making sure that the books are correct. And then thousands more people who come in and audit those people to make sure that they're telling the truth. So, like, there's basically a check a day, you can think, to make sure that the Bitcoin they claim is there is actually there, if not quarterly, if not monthly, what have you. But the point is, there's only so much window dressing you can put up in Wall Street before people realize you are lying and you get sued. And so it's actually much easier for these companies to actually just buy Bitcoin on behalf of their clients instead of lying about it. Now, then the question becomes, okay, you can take that Bitcoin and then you can sell it short, right? So you can have a delta neutral arb strategy. That's illegal. That is illegal. You cannot do that for ETF holdings. And so, and also think about it this way. Not only is it illegal, but it wouldn't make any sense because BlackRock's Bitcoin ETF has been their single most profitable ETF of all time. And so you would want the price to keep going up so that way you could earn more fees. Anyway, I digress. Like, I think much of the paper Bitcoin argument isn't really founded in much of anything other than PTSD of Celsius FTX block buy at all. Yeah. Which is like, that's totally understandable, And it's the same reason that, like, CoffeeZilla making that video about STRC being a Ponzi is totally understandable to believe that, because it's like you have PTSD of all of these scams throughout the years, of FTX exploding when they said they had their customer deposits and they didn't, right? Of Terra Luna exploding as a result of the algorithmic stablecoin unwinding. Like, you see these TradFi, things that sort of have some of the similar markings. And immediately, like, the hair on the back of your neck stands up, and you think back to those events. But the reality is, like, when Wall Street is concerned, it just couldn't be further from the truth. Obviously, they play silly games, and they do illegal things. I'm not saying that Wall Street is perfect, but I'm saying that the margin for scams, the margin for paper Bitcoin, is like 2 order of magnitudes lower at least, relative to what it was when it was just crypto native.
Yeah. I fully agree. Maybe one note on CoffeeZilla. I find it so fascinating that there's so many, someone like him dives into this, or he didn't dive into it because he didn't even understand how it worked when he talked to Jeff, right? But anyway, where, like, dive into fiat money, dude. Like, that's the greatest scam ever portrayed in your life, and you're not even looking at that. But anyway, now I digress. But yeah, like, it shows me also how early it is again, right? If you're in the trenches on Bitcoin Twitter, you're in Bitcoin podcast, you're listening to this conversation, you're in like the 0.5 or 0.1% of anyone who's paying attention to Bitcoin, honestly, right? And so I also think that kind of messes with your perspective, or maybe your projection on the world and your expectation of how other people would understand it and place it in the same way as you do it. But I honestly think that I once had American Hodl tell me, like all the TradFi people, we're 8 years ahead of all the finance people with Bitcoin, right? And so,
Yep.
I mean, just think about tokenized stocks. Like that's going to be crazy. It's going to be so wild that Deegans on Reddit can trade at 3 a.m. and just run a stock to the ground. Right? I don't know, like whatever, just going to do that. So it's going to happen, and we're in the end times of fiat money, right? Like it is all this chaotic, it's all this gambling, it's all this degeneracy. And so people are going to play that game, right? And what I would love to share with people is that, even if you're into Bitcoin, you still need to study Bitcoin. Like you need to understand how this works and the properties that emanate from it, and how, what we talked about, the forced transparency, etc. And that, I think, will give you a lot of, or at least it gave me a lot of relaxation, and just be like, hey, I'm sitting in the stadium, I have my Bitcoin, I'm here, and I'm just going to see how this is going to play out. And people are going to play, fuckery games, and that is fine. That's what I meant with, it's kind of entertaining now. Like I just want to see how this plays out. And the same thing is going to happen with Bitcoin. And just like you and I don't know about you, but me for sure, I sold, I bought Bitcoin at 100, between 100 and 300. I sold it all at 4,000 because I didn't get it. And I look at tweets from 2013 and I tweet stuff like, Bitcoin is a synthesized digital commodity. You can trade 24/7, 365 globally, blah, blah, blah. And I'm like, dude, I got it, but I didn't get it, right? I think that's what TradFi is going to, like, they're going to run in to how hard Bitcoin is. Right? They're going to run in with their own old behavior, projecting it on this new thing, and they're going to fucking explode, just like we did, but 8 years ago, right? And that, I think, is amazing. Like, I love that. I love that idea, because that will eventually strengthen Bitcoin, because it's not about Bitcoin. It's about the games that these people are, they think they can still play on Bitcoin.
Exactly. Yeah, no, I fully agree with you. It's going to be interesting. Like they are going to be of the belief that they could run the same strategies they've run with every other asset, but they cannot. And it's quite remarkable. Like sort of the last entity you saw really manipulating the Bitcoin price was Jane Street. They got sued. The manipulation stopped. That's probably like one of the last major examples you'll see. I'm sure there will be a couple of other shops to try something similar. They'll be scandal. They'll blow up, or they'll get sued into oblivion like Jane Street. But at the very least, it was a very good sort of warning shot that would dissuade any other major Wall Street players with a ton of liquidity from trying to play these sorts of games.
So to wrap up, I would love to get two thoughts from you. What is a spicy point of view you have on Bitcoin right now that you think a lot of people don't agree with you? Like, what's so clear for you that you think others are missing?
Right. Jeez. Well, I think number one, there's going to be another leg down. I don't think that's as spicy as other stuff. People will call you an idiot though every time there's a rally, and then inevitably when the rally reverses, you never hear from those people again. But I think the spiciest take, I suppose, that I've had, beyond BIP 110, because I made a video on BIP 110, got completely chewed out for it, so I'm never making a Bitcoin protocol video ever again. Only Bitcoin price stuff for me. But is the strategy stuff. Like a lot of people, I think you and I agree on this. Like a lot of people were sort of saying that strategy is in a death spiral and they're going to be forced to sell and this and that and the other thing. And lo and behold, like they raise their rate and they're fine. It's like they're not these obligations are not debt. They definitionally cannot become forced sellers. And it's actually good that they're selling Bitcoin, because ultimately what you become is a Bitcoin transmutation machine. You're buying a lot of Bitcoin using proceeds from that you raise by selling an instrument at 12%. Bitcoin's forward returns 20 to 30%. You sell enough Bitcoin to pay this off and you keep the spread, and you do that forever. And then you're a net buyer of a few thousand Bitcoin every quarter, right? And so
what a wild idea.
Like, oh my goodness.
Yeah.
Lo and behold, it's like all of the people who are saying that strategies in a death spiral, they're going to be silent. Like 5 years from now, when that company's fine, when all their other stuff is fine, and it's like these sorts of narratives only come around in a bear market. And I'll tell everybody, like, there are villains right? There are people who are out to get you and who don't have your best interest in mind and are trying to scam you. But frankly, given his track record, I don't think Michael Saylor is one of them, right? Like this guy who's already worth several $billion doesn't need to be doing this, right? He goes on Bitcoin podcasts with us and like autistically screeches about Bitcoin and then, creates all these instruments. There's no reason for him to do this, right? He like if you guys go obviously after the show, but look up hope.com, type in hope.com and see where it brings you. It's literally a Bitcoin website. Michael Saylor, 6 years ago, when he first got his company into Bitcoin, the first public company to adopt Bitcoin on their balance sheet, purchased the domain hope.com, which I guarantee you is several $1 million a year. And he runs it as a Bitcoin website. Okay. So I don't think someone who does that, right, would be actively out to try to scam you and steal your money. And if it was, it would be much more transparent and easy to understand and easy to point out the scam than it is now, right? I don't think a scam company would be as transparent as to make the literal landing page of their website their balance sheet. Not just like on their website, but you literally go to their website, their landing page is their balance sheet. So, I digress, but that's sort of my hot take, if you will, is that strategy will never become a forced seller of Bitcoin. There is an edge case in which they become a forced seller of Bitcoin, but it's so ridiculous, and it would involve Bitcoin dropping 90% and staying there for 2.5 years, that it's basically not even worth considering. That's sort of my hot take, and I've been chewed out by many people for it, but I guarantee those same people won't be very vocal during the next bull.
I just keep on tweeting. It's so crazy that this guy has like an underlying business thesis and he's acting upon it, right? Like he's using Bitcoin as money to pay for his business continuation. What a wild thing to do.
Yeah.
Like if you don't like it, doesn't mean you shouldn't first understand what he's doing, right? And I'm just going to share my take because I really want to share it more. Like you have to view it as a business pivot. It's a business pivot. Like strategy is a startup. I look at strategy as a startup, right? Like MicroStrategy was the dying company that had 500 million in cash and he didn't know what to do with it. He finds Bitcoin. And I think strategy is a new company, right? It's a business pivot. Because eventually, this running business, etc., he will sell it off or it will die. I don't know. I don't even know how it's doing, but it doesn't really matter. Like this is the new focus, right? Like this is the pivot. And every startup has a thesis of the future, right? Like in the future, these and these conditions are true, right? Or these and these people in this customer segment want, etc., etc., etc. The thing that I'm offering. So there's this view of the future, which is extremely clear, right? I don't know, the 41 million in 20 or the 21 million in 2042, whatever. That's the North Star. That's the underlying business thesis, and that's what he's acting upon. Like any business is acting upon an underlying business thesis, right? And so then when he sells Bitcoin to pay for SGRC, for example, he's actually using it as money. He's using it as his business capital, right? It's part of the part of the flywheel is the buying, but also the maintaining, right? And in that sense, Bitcoin is just money. He's using it as capital for his business. And it also helps with distribution. So I don't really, and if he fails, he fails. Like I don't care. If he succeeds, okay, cool. Whatever. It's a dude with a business. And he has the same underlying thesis as you and me, right? So, I think what people don't like, but this is Bitcoin Twitter, right? He's saying like, oh, you should, they are saying that he is saying, that people should rather buy MSTR and Stretch instead of Bitcoin. But he's not talking to you. He's not talking to you. That's just my rebuttal. He's not talking to you.
Exactly.
So,
it's like people can take issue with the company, but you've got to take issue with the company for a legitimate reason. You can't just make stuff up. You can't just like construct a straw man and then say like, I'm going to tear down this straw man. Like you're not actually talking about the real reasons like you take contention with strategy. It's like, and there's that. And then there's also like Bitcoin is money, right? For some reason, until strategy uses it as money, In which case, strategy is evil.
Yeah, but
We're selling
Bitcoin
the
is an
Bitcoin.
arbitrage. Like if you still think it's early, I think it's still early. It is an extreme arbitrage between the people that understand what this is and the people that don't. And
Yeah.
if you don't understand what Bitcoin is, maybe you'll buy Stretch because you think, oh, 10% yield. Well, oh, that's the thing I need, because everything else is fucking shit. So I'd rather try this. Yeah, I mean, like why? You can take offense to that, but that is literally what you do as a business. It's it's an opportunity, right? And if you understand Bitcoin, I would say you save in Bitcoin, which is the most rational, lowest risk thing that you can do. At least it's what I'm doing. And if there's any risk appetite next to that, that's when you buy strategy or Stretch or whatever else thing you would want to invest in and take risk on, right? So these are two extremely different things, right? But it's also a game. It's a game of arbitrage. It's a game of it's an asymmetric opportunity that he's trying to capitalize on. And if you listen to previous talks or podcasts of him, when he says like digital Manhattan, right? He just means like it's a scarce piece of land that's going to be immeasurably valued at some point in the future. And I think I need to get as much of that as possible. And if the rest of the world is asleep and he can do that, which is extremely fascinating, while he's shouting it from the rooftops, then
Yeah.
Apparently he's not buying enough because no one else is waking up to the fact that there's just one guy relentlessly getting after Bitcoin. I mean, I don't know.
Yeah. Exactly. It's like if you take issue with Michael Saylor or Strategy's Bitcoin strategy, just buy Bitcoin. It's like
Yeah,
if he
just
fails,
shut
he
up.
fails.
Shut up.
Bitcoin's going to survive regardless. Just
Yeah,
like
exactly. That's what yeah, fun.
yeah.
All right. Last question. We talked about a lot of headwinds, sticky inflation, geopolitical friction, maybe more war, potential leg down, the 4-year cycle people are still right. But we also talk about how, it's going through this monetization, financialization. I think eventually there is just a relentless bid for Bitcoin, whether it's at 58K, 55, 50, or later at 150. What are you thinking about in terms of price? Let's say we bottom in October, that's the real bottom. Like how do you look at 2027, 2028? Like what is your model? What would break it?
Yeah, that's a really good question. So a couple things, like we're going to have disinflation, I think, whether that comes after another inflationary spike or whether oil pressures can actually abate and we get true disinflation. That'll be a major headwind because investors will be looking forward to a Fed that will cut rates and ease monetary policy and expand the balance sheet more, which is historically a headwind for Bitcoin. People need to remember that Bitcoin managed to go all the way from $16,000 where it bottomed all the way up to 126K for the most part, while the Fed was on hold, or at the very least, while rates were off the zero lower bound. Bitcoin already proved to people that it is not a zero interest rate phenomenon. It can do very well when monetary policy is tight. The Fed was reducing its balance sheet and raising rates. And during that period, Bitcoin went from 16K to 74K, right? And then 90K. And then when the Fed began cutting, Bitcoin managed to go from 90K to 126K. But the point is, during a regime of tightening monetary policy, Bitcoin did extremely well. So imagine what it's going to do when policy loosens. We're already expanding the balance sheet again. And we're going to be cutting rates very soon, whether that's in the next couple of months or whether that's sometime in 2027. So that's headwind number one. And then headwind number two is a massive capital rotation out of AI and into Bitcoin. So I've made probably 3 or 4 videos on this on my channel at this point. And don't click away yet. If you want to watch those, watch till the end of this show first. Basically my contention is that like you are going to see in the same way that right now, well, actually a couple of months ago, I said that, look, the AI trade is overextended. It's very valuable, but it's overextended. Chances are there's going to be some kind of a correction here very soon. That capital probably won't rotate into cash and sit there. It'll probably remain risk on, but it will rotate into other names. 2 different kinds. Number one, assets that cannot be disrupted by AI, and also the disruptors, so the assets that are doing the disrupting. You're seeing part of that now. You're seeing capital rotate. You already saw capital rotate from chips from the main AI stocks into semiconductors and chips. Now you're seeing it rotate into normal mid-cap stocks. And then at some stage, you're also kind of seeing that now rotate into Bitcoin, an asset that cannot be disrupted by AI. So I think markets will remain risk on, and that this rotation we're seeing now at the margin will continue and actually accelerate toward the end of Q3 into Q4 and into Q1 of 2027. So those are the two main headwinds. Obviously, recession risk. If inflation remains elevated, it would be our first inflationary recession since the 70s. But hopefully that doesn't happen. Those are the two main headwinds that I see, both from a macro perspective and a Bitcoin native perspective. Then the other one, like the third headwind, is the end of the 4-year cycle, right? Like, the 4-year cycle is still very much intact as a result of investor psychology. And so a lot of people are going to be waiting to allocate until Q4 of this year. And Q4 is coming up. So buy while you can. We're in a really great buying zone here. And it's going to be a fun next cycle, you guys. We're going to see $250,000, maybe $350,000 or $400,000 Bitcoin. And it's going to be wonderful. Peter Schiff is going to come up with a new reason as to why Bitcoin's going to go to zero. And it'll be a good time.
Oh, this is why it's so entertaining, dude. Well, yeah, awesome, man. Thanks for taking us through all of that. And let's stay in touch, and best of luck with the newborn very soon.
Thank you very much, Bram. I appreciate it.
Cheers, brother.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, if you want to help me shine a light on the message of Bitcoin, please like this video and subscribe to stay connected. I hope to see you for our next episode. Bye.